Do you know who really rules the world? It's not who you might think. In the realm of high finance, there's a trio of titans that wield an incredible amount of influence. Yet their names aren't as familiar as the Googles and Apples of the world. They are BlackRock, Vanguard, and State Street, the world's largest asset managers. BlackRock, the New York-based behemoth, is currently the world's biggest investment manager. With its fingers in many pies, it oversees trillions of dollars in assets, from retirement savings of millions of people to investments of major institutions. Next in line we have Vanguard. Hailing from Pennsylvania, this financial giant has a unique structure. As a mutual company, it's owned by its funds, which in turn are owned by their shareholders. This structure has allowed Vanguard to offer some of the lowest cost products in the industry, making it a favorite among cost-conscious investors. Last but certainly not least, there's State Street. This Boston-based powerhouse is one of the oldest financial institutions in the United States. While it might be the smallest of the three, it's by no means small. State Street is a major player in the world of institutional finance, overseeing trillions in assets. These three giants collectively manage an astounding amount of wealth. To give you a sense of scale, if you were to combine the economies of Japan, Germany, the United Kingdom, and France, you'd still fall short of the total assets managed by these three firms. Their influence extends far beyond finance. They are major shareholders in virtually every big corporation worldwide. From tech firms to healthcare companies, you'd be hard-pressed to find a major company where these three don't have a stake. They're not just bystanders either. As significant shareholders, they have a say in how these companies are run, influencing decisions that shape our everyday lives. These are the invisible giants quietly pulling the strings behind the scenes. Scene script. First up, BlackRock. The name might sound ominous, but what do they actually do? Well, in a nutshell, BlackRock is an American multinational investment management corporation, but it's more than just your average finance firm. It's a financial titan, a colossus that stands tall in the world of global finance. BlackRock's primary business is investment management, which means it manages assets for individuals and institutions. These assets can be anything from stocks and bonds to real estate and other securities. But what sets BlackRock apart is the sheer scale of its operations. BlackRock isn't just big, it's the largest. It holds the crown as the world's largest asset manager. Think of all the money in the world, then imagine a single firm managing a significant chunk of it. That's BlackRock for you. To give you a sense of the scale, BlackRock manages trillions of dollars worth of assets. Yes, you heard that right, trillions with a T. That's more than the GDP of most countries. But BlackRock's influence doesn't stop at investment management. They're also a technology solutions firm. They've developed a platform called Aladdin that's used not just within their own firm but by other financial institutions around the globe. Aladdin helps these institutions manage their investment portfolios and assess risk. So BlackRock is not just managing its own assets, but it's also deeply intertwined with the rest of the global financial system. Their technology helps drive investment strategies and risk assessments for other major players in the finance world. This dual role, as both an asset manager and a technology provider, helps BlackRock maintain a significant influence over global finance. They're not just a participant in the financial markets, they're a key player shaping the direction of those markets. And that's why BlackRock is more than just a company. It's a financial behemoth, a colossus striding the world of global finance. With so much influence, it's no wonder BlackRock is a major player in global finance. Next, we turn to Vanguard, a name synonymous with the democratization of investing. When it comes to empowering individual investors, Vanguard has been at the forefront, leading the charge. This titan of the investing world has a unique selling point: its pioneering role in the introduction of low-cost index funds. In the mid-70s, Vanguard took a bold step, a step that would forever change the landscape of investing. The company introduced the first index fund for individual investors. This revolutionary concept was based on a simple yet powerful premise. Rather than trying to beat the market, why not simply match it? The idea was met with skepticism at first, but it soon gained traction as investors began to see the benefits. Index funds, by their very nature, are designed to mirror the performance of a specific market index. They offer broad market exposure, low operating expenses, and low portfolio turnover. These factors make them an attractive option for investors looking for a low-cost, passive investment strategy. But Vanguard didn't just stop at introducing low-cost index funds. The company went a step further by adopting a unique ownership structure that sets it apart from its competitors. At Vanguard, the investors are the owners. Yes, you heard that right. With Vanguard, when you buy their funds, you are not just an investor but also an owner of the company. This unique structure aligns the interests of the company with those of its investors. The benefits of this model are manifold. Lower costs, better returns, and greater transparency are just a few of the perks that come with being a Vanguard investor. This focus on delivering value to the investors has earned Vanguard a reputation as the people's champion in the world of investing. Vanguard's relentless commitment to lowering costs and increasing accessibility has been a game changer. They've shown that investing need not be the preserve of the rich and the privileged. With their low-cost index funds and unique ownership structure, Vanguard has opened the doors of investing to everyday people. Vanguard has truly made investing accessible to the masses. Finally, we have State Street, a firm that may not be a household name, but wields significant power nonetheless. Nestled in the heart of Boston, Massachusetts, State Street is a titan of the financial world that often goes unnoticed by the everyday investor. Yet its influence extends far and wide, reaching the corners of the globe. State Street's primary role is as a leading provider of financial services to institutional investors. These are not your average mom-and-pop investors. We're talking about pension funds, mutual funds, and insurance companies, the big players who move the financial markets. State Street services over 100 countries, managing trillions of dollars in assets. To put that into perspective, their assets under management are larger than the GDP of most countries. Now you may be wondering, how does State Street maintain its leadership position in such a competitive industry? The answer lies in their relentless focus on innovation. In a world where financial technology is rapidly evolving, State Street is at the forefront, constantly seeking out new ways to deliver value to its clients. From developing cutting-edge risk management solutions to harnessing the power of big data analytics, State Street is not just keeping up with the times, it's setting the pace. But let's not forget, State Street is more than just a financial services provider, it's a global leader in asset management. With its hands on the levers of such vast wealth, State Street has the power to shape the economic landscape. It's a role they take seriously, striving to foster sustainable growth and drive positive change in the financial world. State Street may fly under the radar, but its impact is undeniable. Its leadership in financial services, dedication to innovation, and significant role in asset management make it a silent powerhouse in the global economy. But remember, while State Street might not be a name you see in your daily newsfeed, the ripples of its actions are felt worldwide. And that, dear listeners, is the true measure of power. So do these firms really rule the world? To answer this, we must first understand the concept of financial influence. BlackRock, Vanguard, and State Street are not just ordinary firms. They manage massive amounts of wealth. In fact, their combined assets under management are more than the GDP of most countries. This enormous wealth gives them a strong voice in the financial world. They can influence market trends, corporate decisions, and even government policies. However, financial influence does not equate to ruling the world. Yes, these firms have a significant say in the financial realm, but they don't have the final word. Like any other corporate entities, they operate within a system of checks and balances. They are regulated by financial watchdogs and are held accountable for their actions. They cannot just do as they please without facing the possible repercussions. Moreover, these firms are ultimately accountable to their investors. It's the investors' money they are managing after all. They have a fiduciary duty to act in the best interest of their investors. If they fail to do so, they can face legal consequences. So, while they have a lot of influence, they also have a great deal of responsibility. In conclusion, it's a bit of an oversimplification to say that BlackRock, Vanguard, and State Street rule the world. They are powerful, yes, but they operate within a framework of rules and regulations. They have a lot of influence, but they are not omnipotent. They cannot control everything, and they are not immune to the laws of the market. While BlackRock, Vanguard, and State Street wield significant power, it's not quite accurate to say they rule the world. But there's no denying their colossal influence.